Welcome to the deep dive. We've got quite a mix of sources today, covering everything from huge tech investments,
Billions, potentially.
exactly billions, to the new Nintendo console launch, the latest U.S. job numbers, and even, well, a pretty public clash between big names in politics and business.
It's a lot, but we've sifted through it all.
Right. Our mission, like always, is to cut through that noise, pull out the really important insights, the surprising bits, and help you connect the dots. It's about getting you informed quickly and deeply.
We'll unpack the reports, look at the essential points, the context, basically figure out what it all means.
Okay, let's jump right in. First up, a potential investment that's just staggering. It shines a light on a really crucial, maybe less flashy, part of this whole AI boom. We're talking Meta.
Yeah, Meta. And the report suggests they're in talks to invest a huge amount in a company called Scale AI.
Huge how? Like, what are we talking?
The figures being thrown around could top $10 billion.
$10 billion. Wow.
Yeah. If that deal actually happens, it'd be one of the biggest private funding rounds ever, and definitely Meta's largest external AI investment so far.
Okay, $10 billion is serious capital. So, Scale AI. What is it they actually do that commands that kind of attention?
Right. So Scale AI is all about data labeling, data curation. The sources really stress how critical this is for training machine learning models.
Because the AI is only as good as its data, right?
Exactly. Think of it like this. AI models need to learn from vast amounts of information, images, text, you name it. Scale AI has contract workers who basically tidy up all that data. They label it, tag it, structure it, so the AI can actually learn from it properly.
So they're doing the essential groundwork.
Precisely. And with this generative AI explosion, the demand for that kind of high-quality, clean data is just insatiable. That's why they've become such a key player.
So the fancy AI we see relies on this, well, pretty labor-intensive work happening behind the scenes. And Scale AI must be growing like crazy then.
Oh, absolutely. They were valued around $14 billion earlier this year, and Meta actually, Microsoft too, they were already investors back then.
Okay.
But recent talks, they're suggesting a valuation maybe closer to $25 billion, and their revenue projections kind of back that up, expected to jump from about $870 million last year to maybe $2 billion in 2025.
That growth certainly puts the $10 billion investment talk into perspective. Why is this move so significant for Meta, though? The sources say it's a bit of a shift for them.
It is, yeah. Meta's historically leaned heavily on their own internal research, and they've often favored open sourcing their tech, like the Llama models.
Right.
So potentially pouring $10 billion into an external company is, well, it's different. It looks more like what Microsoft did with OpenAI or Amazon and Google with Anthropic.
But Meta doesn't have that big cloud business like the others do, which often frames those deals.
Exactly. That makes the structure of this potential Meta deal a bit unclear. But it definitely fits with Zuckerberg making AI the absolute top priority. They're planning to spend something like $65 billion on AI this year alone.
Wow. And they're pushing Llama hard. 1 billion users already interacting with it via Facebook, Instagram, WhatsApp.
Right. And there's another layer here. The sources point to a connection between Meta and Scale AI, specifically in defense tech.
Defense? How so?
Well, Meta recently partnered with Anduril, a defense contractor, and their AI models got approval for U.S. government and defense use. Reportedly, they're working with Scale AI on something called Defense Llama.
A military version of Llama.
Seems like it. And Scale AI itself won a big Department of Defense contract earlier this year, too, so there's definitely overlap in that space.
Interesting. So for someone listening, why does Meta possibly spending billions on data labeling matter?
Because this pulls back the curtain, it shows the massive, often hidden infrastructure needed to power the AI tools that are changing everything. It highlights the huge cost and complexity involved in just preparing the data. It's not just about clever algorithms, it's about this foundational, meticulous work. That's where a lot of strategic value is right now.
Fascinating stuff. Okay, from the hidden layers of AI, let's switch to something much more visible, maybe even something you could buy today, if you can find one.
Ah, the Nintendo Switch 2.
Exactly. Launched today, right. And the reports say it flew off the shelves immediately.
Yeah, sold out instantly at places like Walmart, GameStop, other stores like Best Buy, Target. Very limited stock, only in some locations, high demand for sure.
And the sources mentioned who's providing the key tech inside.
They did. Nvidia is supplying the custom chip, the Tegra 239. SK Hynix is providing the storage, UFS storage. And MediaTek's doing the Wi-Fi and Bluetooth.
So that Nvidia chip, What kind of performance boost are we talking about? The sources gave some specs.
A big leap, apparently. The specs mentioned point to up to 4K gaming when it's docked, connected to a TV,
4K, nice.
and up to 120 frames per second at 1080p in handheld mode. Plus support for HDR and AI upscaling for visuals. The claim is up to 10 times the graphics performance of the original Switch.
10 times.
Yeah.
That's a serious upgrade. Given that power and the instant sellouts, what are the analysts saying? How does this impact those suppliers, like Nvidia?
It's interesting. The analyst takes are a bit nuanced. One view we saw was, look, if the Switch 2 even comes close to the original success, and remember, the first Switch sold over 150 million units, it's the third best-selling console ever,
Right.
then yeah, suppliers like Nvidia will definitely see a nice bump in their embedded systems business. But, and this is the key point, that part of Nvidia's business is still pretty small compared to their giant data center and core GPU segments.
So good for them, but maybe not moving the needle overall for a behemoth like Nvidia.
That was pretty much echoed by another analysis. It called out the Nvidia chip as the most abundant piece of tech from any single supplier in there, but it also questioned if the console itself will make as big a splash as some hope, maybe pointing to the display not being quite as premium as the OLED Switch 1.
Okay.
So the conclusion there was similar. Probably not a needle mover for Nvidia compared to, say, their AI chip sales.
Interesting perspectives. What about Nintendo's own sales goals? Did the sources mention those?
Yeah, Nintendo's projecting 15 billion units sold by March 2026. But some analysts think that's conservative.
Really?
Yeah, one forecast we saw pegs it closer to 17 million, even considering things like potential tariff impacts, assuming Nintendo adjusts pricing and bundles strategically.
Okay, so some disagreement on the scale of the impact, but general agreement, it'll be successful and good for the suppliers, just proportionally smaller for the giants. For you listening, especially gamers or tech followers, this is the big hardware story now.
And it highlights a few things, right? The crazy demand for hot consumer tech, how interconnected everything is, Nvidia, SK, Hynix, MediaTek, all powering one device. And importantly, how analysts weigh the impact of one product on a supplier's overall business. It's all relative.
All right, complete shift now. Let's talk about the broader economy. We need to dig into the latest U.S. jobs report for May.
Right, the report that came out Friday. And it painted a pretty mixed picture. Definitely suggests things are cooling off, but maybe not falling off a cliff.
So what were the headline numbers?
Non-farm payrolls increased by 139,000 jobs in May. But, and this is important, the numbers for the previous 2 months, March and April, were revised down. Quite a bit, actually, by a combined 95,000 jobs.
Oof, okay. So past growth wasn't as strong as we thought.
Exactly. The unemployment rate held steady at 4.2%, and wage growth actually ticked up a bit, 0.4% month over month and 3.9% compared to last year.
So job creation slowing, past numbers weaker, unemployment steady, wages rising slightly. How did the sources interpret all that?
The take was generally that it was slightly better than economists expected. The median forecast was around 126,000 new jobs. So it kind of eased fears of a really sharp downturn.
Okay.
But it still points firmly towards gradual moderation. It's just employers are getting more cautious about growth prospects.
Cautious. What's making them cautious, according to the reports?
Factors like higher costs, especially potential impacts from tariffs, seem to be weighing on businesses. And just general prospects of slower economic activity ahead. There is an interesting note that Trump pausing some import duties actually gave a little lift to business and consumer sentiment recently. Suggests tariffs are definitely on people's minds.
Yeah, we saw a quote from Carl Weinberg at High Frequency Economics. He talked about firms potentially hoarding labor because of all the uncertainty, especially around tariffs. Like, they were hesitant to let people go until they saw how things would shake out.
Hoarding labor due to uncertainty. That's a really interesting way to put it. How did the markets react when the report came out?
Treasury yields went up. The S&P 500 opened higher. The dollar strengthened. And traders seemed to pull back bets on the Fed cutting interest rates soon. The report wasn't weak enough, basically, to force the Fed's hand right away.
Makes sense. Within the report, any specific sectors showing strength or weakness? Yeah, services still looked pretty strong. Healthcare, social assistance, leisure and hospitality were hiring. But there were definite warning signs in industries more exposed to trade issues, particularly tariffs.
Like which ones?
Manufacturing payrolls actually dropped by 8,000. That's the biggest drop this year. Transportation and warehousing barely grew after falling previously. And temporary help agencies, they saw their biggest job losses since last October. So, yeah, it looks like those policy impacts are starting to bite in specific areas.
Beyond the sectors, any other concerning bits in the data?
Yeah, a couple of things stood out. The household survey, which is separate from the main payroll count, showed a big jump, 254,000 people moving from employed to being out of work. That's the biggest jump since early 2022.
Mm.
Also, the federal government itself shed jobs 22,000 last month, the most since 2020. And that connects to a bigger worry mentioned in the sources.
Oh, geez.
Economists are concerned that potential cuts to federal spending could put maybe 500,000 U.S. jobs at risk, not just government jobs, but contractors, universities, anyone relying on that funding. Right.
Scott Anderson from BMO Capital Markets was quoted saying, "Cracks in the facade of labor market resilience are now starting to show." He warned it could get worse if this uncertainty around tariffs and spending cuts continues.
It really highlights how policy decisions ripple through the job market. What about the participation rate? Did that change?
Yes, and that's a really key detail. The overall labor force actually shrank. The participation rate, the share of people working or looking for work, fell to 62.4%, a three-month low. And it fell for prime-age workers, too, the 25 to 54 group. Bloomberg Economics had a sharp take on this. They said the unemployment rate held steady for the wrong reasons. Not because jobs are easy to find, but because people are dropping out of the workforce.
Ah, that paints a very different picture than just a stable unemployment rate. So how does all this feed back into what the Fed is thinking about rates?
Well, the sources tie it directly to the Fed's wait-and-see stance. Officials keep saying they're in no rush to cut rates until they get more clarity on how administration policies are affecting the economy, including the labor market.
Makes sense. And there was mention of New York Fed research suggesting tariffs did seem to negatively impact employment and investment for some companies dealing with higher costs. So the Fed is watching this policy angle closely.
Okay, so policy uncertainty is a big theme here. But the reports also mentioned some conflicting signals overall in the job market.
They did. You see big companies like Microsoft, Disney announcing job cuts. But then overall, U.S. job openings actually went up unexpectedly in April, and layoffs generally are still pretty low historically.
So it's complicated.
Very. And economists are watching closely how labor supply and demand affect wages, especially with inflation potentially ticking up again.
So this jobs report is definitely not a crash sign, but clear signals of slowing definite vulnerabilities tied to things like tariffs and government spending.
Exactly. The takeaway for you is to think about how these bigger trends, this policy uncertainty, might filter down to your own industry or region. It adds another layer to just looking at the economic numbers.
Okay, from the broad economy, let's pivot to where politics, business, and the markets collide very publicly. We need to unpack this reported feud between Elon Musk and Donald Trump.
Yeah, this one definitely made headlines. The sources, including comments attributed to Cathie Wood, lay out this escalating back and forth. It seems to have intensified after Musk left the Department of Government Efficiency.
Right.
Musk criticized Trump's proposed one big, beautiful bill, calling it out for potentially ballooning the deficit. Trump apparently fired back, questioning Musk's contributions and even reportedly threatening federal contracts for Tesla and SpaceX.
And it got more personal from there, didn't it?
It did. More recently, there were reports of Musk making allegations about Trump related to unreleased Epstein files. Trump's side dismissed it, called Musk erratic. Then, the same day, Musk reportedly threatened to decommission the Dragon spacecraft.
The one that goes to the space station.
Yeah, but then he walked that threat back just hours later.
That quick reversal feels notable, and this is where Cathie Wood's analysis comes in.
Exactly. Cathie Wood from Eric Invest weighed in. Her take, as reported, is that Musk and maybe investors are realizing how much the U.S. government has control over the companies. She saw that Dragon threat reversal specifically as Musk backing down from the fight with Trump.
And the sources stress this isn't just drama, right? There are real business implications.
Absolutely. That's the big worry for investors mentioned in the reports. A bad relationship with the government, current or future, could mean a tougher regulatory environment for Musk's companies.
Especially companies that rely on government business or face heavy regulation.
Precisely. Wood pointed out SpaceX has something like $22 billion in government contracts. Think about Tesla's robo-taxi plans. Rolling those out depends heavily on regulators. Neuralink is under FDA scrutiny. Regulatory hurdles could seriously slow things down or block them entirely.
Wood also floated a theory about why this fight might be so public.
Yeah, an interesting one. She speculated, according to the reports, that maybe Musk is orchestrating this public fight. Her theory was it might be a way for Musk to distance himself from the government, maybe specifically the Republican Party. Her reasoning: Trump's tough stance on China. China's a huge market for Tesla, both manufacturing and sales. Wood suggested Musk wouldn't want to be impaired there by being too close to someone seen as anti-China.
Ah, a strategic calculation? Maybe, not just emotion. Regardless of the motive, what's Wood's take on Musk and Tesla through all this turbulence?
She still seems confident in Musk, saying he works really well under pressure. Her advice reportedly was for the Tesla board to encourage him to focus on boosting U.S. economic growth to tackle the deficit playing to his strengths.
And ARK's investment strategy, how do they handle this kind of volatility in a huge holding like Tesla?
Would explain they're used to it. They use active management. She specifically mentioned ARK sold nearly $500 million of Tesla stock after the 2024 election, anticipating volatility. They basically try to use the swings to their advantage.
And the market definitely reacted to the feud itself.
Oh, yeah. The day the news broke heaviest, Tesla stock plunged 14%. That's over $150 billion in market value gone in a day, according to the reports. It bounced back some the next day, up about 3.7%.
But despite all that, Wood is still long-term bullish on Tesla.
Apparently so. The sources reiterate her view that Tesla's poised to dominate the robotaxi market because of their autonomous driving lead. Her firm has that famous $2,600 price target for Tesla by 2029, way above where it is now.
And just remind us, how big is Tesla in ARK's funds?
As of Q1, they held nearly 3.3 million shares, worth around $928 million then. It's a tiny fraction of Tesla overall, but a big chunk of ARK's assets, like 7.6% across the firm. And it's a top holding, over 10%, in key ETFs like ARKK and RKQ.
So for you listening, this whole episode isn't just celebrity gossip or political theater. It's a stark reminder of how tangled major companies and government can get. It shows the real risks, market risks, regulatory risks when those relationships sour. It makes you think about how much political connections or friction can impact a company's bottom line and its stock price, and how big investors try to play that game.
Yeah, it's a very clear case study in how external political factors can hit a company's operations and valuation fast.
We've definitely covered a lot of ground today, pulling the threads from these different sources. We went from Meta's potential huge bet on the foundations of AI.
That data labeling piece.
Right. To the new Switch 2 launch and its supplier network. Then that deep dive into the mixed signals in the U.S. jobs report. And finally, this very public, market-moving clash between Trump and Musk.
And when you look at them together, you really see the connections, don't you? How tech innovation, economic trends, policy choices, even personal political spats, they all weave together.
Absolutely.
Yeah.
And staying informed means looking past just the headlines to grasp those underlying dynamics. So as you think about all this, here's a final thought, building on what we discussed. Consider the different kinds of uncertainty we saw today. Uncertainty in the job market from tariffs or spending cuts. Uncertainty for companies like Tesla or SpaceX facing political headwinds and regulatory questions. How do these different types of uncertainty influence decisions? From hiring plans at a company to major investments, maybe even your own career choices, or where money flows in the market. How do you navigate a world shaped by these interconnected and often really uncertain forces?
It's definitely a reminder that things are always shifting, driven by this complex mix of tech, economics, and politics.
That's our deep dive for today. Thanks for joining us. We'll be back soon to unpack more sources you need to understand.